Hello, this is Ahura. I'm with you here today, Tuesday, October 12th, to see what happened yesterday in the market, what is going on, and what we have to take care about for today's trading. Yesterday, the oil market increased and decreased a little bit after some news. Firstly, the uptrend is continued because of the flood that was destroying some part of the China, that they're producing the coal as well. This floods in the region. It happened in the region in China that they're producing coal, and this coal, this decrease in the market, coal market, increase the oil market, increase the oil demand. So it was supporting for oil in line with the other news that in the last weeks we had. And then we had a news from the Aramco, Saudi Aramco, that they told they are going to have some discount for their Asian buyers, and it's a little bit cool the market, and the oil price decreased a little bit. However, still is in uptrend and increasing. The market. Firstly, let's say about the this before showing this what I'm talking about, this decrease and increase in the market. This is what happened after. This is what was the Chinese news, and then it was the Aramco news that changed the market. But totally, as you can see here, oil is increasing. There is something also happened. In the second part of the day, the market risk is decreased, and this decrease in a market also helped the oil price to again recover itself, so some part of its loss. However, we are still the market risk is still in a high. It's not down yet, above almost around 20, and it's still high. In the financial market, in the stock markets, we talked yesterday, we are in the general downtrend. And as I told yesterday morning, that if we see a little bit increase here, it's not doesn't mean that we are going to see the markets in higher levels. There are few reasons for that. First of all, as I told yesterday, market after the employment data. First of all, the employment data was not that bad, as bad as was many people you're talking about. Yesterday, explained about that. However, at the same time, we have other data that showing that we have to go to the tapering, and we have to start the rate raise. This week, the focus in next days, the focus will be not on employment data. Mostly focus will be on consumer price, consumer expectations, and consumer confidence. Very, very important data besides the retail sales. This retail sales, consumer confidence, and the consumer expectations, consumer spending, consumer confidence, consumer expectations. These indexes will be very, very important, and we have to take care about them. These data will tell us that how consumers, how much the people are ready to spend the money. As much as they spend more money, we can see the market can increase, and as much as it falls down, we can see the ease more decrease, more ease in the market, in the stock market. At the same time, energy price increasing. As I told in the last days, higher energy price means higher inflation, higher producer inflation, and higher producer inflation. It means that we are as consumers, as a final user, we have to pay more, and it means that higher inflation. So higher energy price plus shortage in the labor market. Still we have this problem, and increasing all employers, they're trying to increase the salaries, they're trying to increase the bonuses, and all these again means higher prices, and we as a final users, we have to pay more. Totally all about everything about the inflation right now. Inflation, consumer confidence, how the consumer feeling about that, how much they're ready to spend the money, how much these data right now is more important than everything, than any other data in the market. So we have to focus on this data, and they were showing us that how much we have to worry about in the market. To be honest, and as I told in many times before, October, November, and even the first half of December, we are waiting to see more decrease, more ease in the market. The stock markets will decrease, will ease. The prices will be start falling. But it doesn't mean the falling. It doesn't mean it's like a correction. It's a better say that we can see the correction these days, but the data will be changed in the next year. Today we have to take care about the in the US season. We have to take care about the job opening numbers. But the interesting stuff. Let me tell you something interesting. So far by now we had producer. PPI, producer price index, or producers inflation numbers from Japan. And you know what? In September, it's increased 0.6%. And oh, sorry, 0.3% in September. And yearly base, it's increased 6.3%. This is amazing. In Japan, PPI yearly base comparing to September 2020, the PPI increased 6.3% in Japan. This is something incredible because we never have these kind of numbers in Japan. It was like these numbers was so less than this. So this means that the inflation is a little bit serious than what we thought before, and what even the Fed was thinking, what the Federal Reserve was what they were telling you, that it's going to be the temporary, it's going to it will be eased, it will be down next months. But as we see, as Mr. Miss Yellen also told, it's not going to be down so fast. So at least for the next 6-7 months, we have these higher levels, and after that also maybe start decreasing, and it will start decreasing very slowly. So we have to take care about inflation and the consumer numbers for today. In UK, in the European season, UK employment data will be very important. Plus their average income. It's the same. Employment market or labor market in the UK and US was all had they had almost the same same fate in the last month. So take care about the UK employment numbers. We are expecting to see a little bit ease in employment numbers, like employment. Unemployment rate was 4.6 a month before, and we are markets are expecting for 4.5%. I'm not sure if we can see that. Probably we can see the same, either 4.5% or 4. Not much, like something between 4.4 and 4.6%. Not that big difference we can see in a market. Then later we will have the German economic sentiment data, and we have to take about that. The Germany is the biggest factory in Europe, and the data from the Germany will be very, very, very important. And in the US season, as I told, job opening, GLT's job opening numbers will be important. We have the job opening numbers. Almost like we have more than 10 million jobs opportunities in US, while hiring is just less than 200K. But this is we have to talk about that another time when we have time, more time to explain you why it happens in the market. So yeah, this is, and today we have the 3 years and 6 months bill auction in the US, also 3 months, 6 years, and 10 years notes and bill auction in the US, and we have to follow that. It means that probably today we will have the higher. Probably today we will have the higher. Bond yields. I mean, the bond yields will increase today. Goldman Sachs increased, as I told yesterday, decreased its expectation for economic growth from to 4%, from earlier 4.4% to decrease it to 4%. And it means that the economic growth it will be a little bit less in 2022. So we cannot less than earlier. I'm looking after that, see if there is any other important data that I not forget to say. So this yeah, about so we earning reports is starting. I have to mention that the market is waiting to see the more than 26% increase in the earnings from comparing with the third quarter of last year. Market should be a little bit something like the S&P 500 list should be something like 26% better than year ago. but it should be something like 80%, more than 80% less than second quarter. So we have to take care about this data. It means that if we see the ease in the numbers, if we see the decrease in a number in earnings less than when the companies they were reporting their second quarter for the third quarter, they were so, most of them, especially tech companies, they were so disappointing during their talks. Their comments was disappointing about the third quarter. However, it's not. I don't think that's going that bad as well. So totally should be positive about the numbers. I think you should be positive about the numbers, and these positive numbers. By the end, as I told, it slowly will change the market up, the market sentiment, and that's the reason. We are waiting for ease in the market, because the central banks, not just in the U.S., the central banks totally, they are going to decrease their support. They are going to start tapering. They are going to start increasing their rates. So it means that the less support from the stock markets we will see in next month. At the same time, better than expected, kind of better than expected earnings will support the market sentiment. So these data together will compare, these sentiments together will stop market falling. So it doesn't mean, that's why I'm telling that if we see the lower numbers, it means that we'll have this kind of correction, and we are not going to see that much. We are not going to see that much falling in the stock markets. So at the same time, energy stocks will take care about the market, because they're increasing so badly, and they will increase the stocks after, if they fall with other parts. The other thing that I need to talk about, I will to explain you about the stock market, about the US dollar index. Let me tell you about the US dollar index. This situation will still help, will help still that the situation in the stock market for the US dollar, and more like that's like higher levels for the US dollar index is expected to see for now, as long as we have a little bit negative, or a little bit negative sentiment in the stock markets, that it's going to be decreased. We can see higher levels for the US dollar instead. I mean, lower numbers for US stock markets, higher levels for US dollar. This higher level for US dollar probably will stop market gold bulls, because the gold, as I told before, also gold is swimming between the bad and good news, the news that's supporting the gold, and make the golds to fall more. The markets risk increasing the gold price. At the same time, market risk right now increasing the US dollar, the US dollar demand as well. So higher US dollar means that the lower gold. So the gold will be swimming between the numbers, but totally we are in a general outlook. We are in a downtrend, because the general outlook in the market, in the stock markets, is a positive, which means that the less demand for gold, unless if we breach the 1,770 and higher. Otherwise, we are in an overall downtrend. This is the totally what's going on in the market. In Asia, this caution sentiment and this higher oil prices again stopped yesterday's a little bit better movement, and now we can see Nikkei 225 fell more than 1%. Same thing in Hang Seng and Shanghai. Totally, Asian stocks more than 1%. They lost more than 1% today in Tuesday early trading hours. This is what's going on in the market, and still for today also we are expecting to see more ease in the stock market and more caution ahead of consumer numbers in the next days. Thanks for watching this video, and hope it was useful for you. See you guys tomorrow. Bye.